We discuss everything about the stock markets, how the trade has panned out, as well as where were the gains and losses seen, and what should be your strategy as investors going forward from here. Joining in is a very special guest with me on this edition. I have Mr. Rajesh Agarwal. He's the head of research at AUM Capital. Welcome, sir, and thank you so much for taking out time for this discussion. First up, let me just give an overview to all the viewers to understand how the day has panned out, and then I will come up to you to understand all the insights about the markets as well. So, of course, it was the big HDFC merger news that actually led to a whole sort of rally in the stock markets today. Right from the word go, we saw the Sensex opening above 60,000, the Nifty crossing 17,900. And of course, we saw the gains being built through the day as well. And solely these two index heavyweights, HDFC and HDFC Bank, were critical in leading the kind of rally that we have seen today. At close, we did see the Sensex ending at 60,612 and also the Nifty managing to close above the 18,000 mark after a long hold at 18,053. Of course, over 2% kind of a surge is what we had seen in the benchmarks. The broader markets also participating into gains of almost 1.5% being seen on the mid caps and the small caps as well. And in comparison, when you talk about it's the Nifty Bank that really shone bright, about 3-4% kind of gains for the financials and the banking major as well. So let me just take Mr. Agarwal's view here as to how did you see the entire session being panned out and how do you see the market outlook from here, sir?
Good afternoon, Sakshi. Thank you for calling me. Today was really a very good day, I would say. In my career, I haven't witnessed from a very long time. I don't even remember when I have seen HDFC twins going up by double digit in percentage terms. And that was the kind of euphoria in the market, especially in the banking and the BFSI space, I would say. Both of them were doing very well, despite the fact that there were global concerns on China COVID thing or geopolitical tension for the Russia-Ukraine market. Discounted everything and moved just forward. And 80,000 mark, which was almost looking impossible almost 2 weeks back, was really tested today. And I am very hopeful that this momentum is going to continue. There may be some bouts of profit booking here and there, but we should not forget that we are on the verge of Q4 numbers. The only major trigger this week would be RBI policy. After that, people will be looking on numbers and stocks will move accordingly.
Right, absolutely. You're right in saying, and you're hopeful that the momentum will also continue. I want to ask you, sectorally speaking, should one stick with the banking and financials given the kind of momentum that we've seen today, or should one really look at the other pockets that were also participating in the rally?
See, when we are talking of economy doing well, post-COVID economy taking up, we can't leave banking behind because it's one of the major factors of the entire growth structure, growth story. So you cannot leave banking. You have to be in banking. Maybe for short-term traders, one can wait for some correction, but for longer-term traders, there are enough scope in the market. HDFC, the twins which are going to be merged can be a one big story. The other one big Kotak Bank, which has been witnessing quite a bit of dripping from the last few trading sessions. The valuation have become extremely attractive, and for a very short term, I think IndusInd Bank is going to outperform.
Absolutely. And if one has to understand some stock specific, ideas, if you had to share fundamentally, which one would those be?
See, there are a whole lot of mid-cap stories, which I think in the last 3-4 months has taken quite a beating because of various reasons. Going forward, I think these stocks can give you good returns. One can be Vardhaman Textile Limited, which we believe that post-COVID, the textile story is going to do well, not only because of the demand from European and American countries, but because of also because of government focus onto that. And when we talk of Vardhaman, this company has got a very strong balance sheet. There's a very conservative management. They're doing very well. The expansion is on track. And I think from the current market price, it can give 20-25% return in the very short term. The other one would be, of course, Graphite India Limited. We have seen a whole lot of momentum coming into metal stocks. and graphite or HEG, the electrode players, would be a indirect play on steel. And with graphite having a whole lot of capacity, the valuations are looking attractive. I think these are some of the stocks which one can have a look on.
Okay, so two stocks right there, Vardhman Textile, Graphite India, from the mid-cap space that you can look to add to your portfolio at this point in time. Of course, Mr. Agarwal believes that the momentum is strong and should continue going forward from here. Of course, crucial psychological levels have been crossed over today, and one expects that the markets will be holding on at those levels as well. Of course, there could be bouts of profit booking, but the strength and the uptrend should continue. But coming back onto the HDFC story, we've spoken enough throughout the day, but of course, there's the larger interest of investors of like how you spoke. We have never seen such a kind of move in a single session for both HDFC and HDFC Bank. If you were to suggest to all the investors to now, after this kind of a surge, to look, would you be preferring at this point in time till the merger completes, should one stick with HDFC or should one go for HDFC Bank?
See, one should go with HDFC Bank at this point of time.
Okay.
Because longer term looks very good. The discount is going to vanish. The holding company discount of HDFC is going to vanish. The balance sheet is going to be very large. And the best thing is they are going to have access to the whole lot of branches, 6,000 plus branches, whole lot of customers for selling. They're cross-selling their products, I would say, credit cards, insurance, and other products. And the best part is the bank, which was lacking into the mortgage business, which is going to have mortgage business and would be at par with other players like ICICI Bank.
Absolutely. Well, thank you so much, Mr. Agarwal, for being with us and for sharing all these insights with all our viewers. Hope to have you back very, very soon to discuss more stocks and sectors and the market outlook as well. Thank you so much for sparing your time for us.